I'm El-Hassana Kaba from Côte d'Ivoire. I would say I have spent all my career in the banking industry. First with Citibank, that was my first employer as relationship manager. After 7 years with Citibank here in Abidjan, I joined Standard Chartered Bank as senior relationship manager, and 1 year after as head of sale. And I moved from Standard Chartered Bank Côte d'Ivoire to Standard Chartered Bank in Cameroon as head of business. After 2 years there, I had a short-term assignment in Nigeria with Standard Chartered Bank Lagos to work on the great project that was called the Africa-China Corridor. I was in charge of the trade between China and French-speaking countries. When I was there in Nigeria, I received a promotion to join Standard Chartered Bank in Shanghai as Director of Metal and Mining. And at the same time, I received a proposal to join one local bank in Senegal, Bank Atlantic, as CEO. And therefore, I had to make a choice between Shanghai and Dakar. Finally, I decided to stay in Dakar in Africa. Then I joined Bank Atlantic in Senegal. It was really a very, very, very great challenge. It was very, very exciting because that was my first experience with the local banks. Having spent all my career previously with international banks, that was my first experience with the local banks, the local African banks. You know, when you work for international bank, there are some issues you will never face because the brand is already established. The bank is there for more than sometimes a century. When you work for the local banks, every day is a fight. And every day you learn also. So really with Bank Atlantic in Senegal, I've learned so much and I've done so much because my mission was to make a bank profitable. The bank were open after 5 years, the bank was just suffering successive losses. And our mission was to make the bank profitable. The first year when I joined the bank in June, the first year we were able to report a first profit with the same team. And so we did a great thing there. After having spent now 4 years, I think, with Bank Atlantic in Senegal, in 2014, I have decided to maybe take the time now to do what my long-time dream. When I was a kid, that was my dream, was to create a bank from scratch. Then I resigned from my CEO position to work on this project to create a bank, a local bank owned 100% by local investor. So I thought that it would have taken 6 months. Finally, it has taken 40 months, but we obtained our banking license in February 2019, and that's how Mansa Bank was created. I have a postgraduate diploma from Oxford in strategy and innovation, a postgraduate diploma from Paris-Dauphine University in business management, and also a Master of Science in Science of Management from Abidjan University, and the last one is an executive certificate from the Harvard Business School for creating shared value. I think in our local banking environment where we are competing against international banks, against large regional banks, we also are the last entrant in this market. All of the bank, or at least 80% of the bank in our market, have their own networking, their own branches. We, Mansa, we open as a branchless bank, except our headquarters. Our plan is not to open branches across the city and across the country. Our plan is to be a single branch bank. Then our plan is to rely really on partners. And also, we want to attack the retail segment and the mass market through digitalization. So I will say our business model anticipates the change. And we think that innovation is most about being capable to anticipate and to act instead of reacting. So based on that point, I will say yes, we are innovators. But even more, we do not want to be perceived as innovators. We want to be perceived as disruptors. And that's why even for everything, we act as a disruptor. Even for our headquarters, the place where we are based, there are no bank there. All the banks are in one area, we are in other area. The way how we communicate our advertising is somewhat very different. And our product, I would say the way we want to address the untapped market of unbanking population is a new way. As I was clearly saying, we want to promote a true partnership with telco, fintech, wholesaler, other states entities. So yes, we are innovators, but moreover, we will act as disruptors. I would say in 2002 or in 5 years, the trend will really rise because here in our region, 70% of the population is under 20 or 25. So we have a huge part of the population that's young. And today, all of them are using their smartphone. So let's say our next customer will be the youth of today. So meaning that digitalization is not, I would say, today is obvious. Let's say like this. It's obvious that with the COVID the issues, the economy will be cashless more and more. That is why we refer to one theory. When I was a student, we studied one theory called the backwardness theory. One of the advantage of this theory is that for some developing countries, thanks to the technology, we'll be able to do some leapfrog. And that is what is happening in our society, where we will move from cash economy to the digital economy. In other regions, this has taken centuries to do this kind of move. But we think that the trend will really will be accelerated. And we, Mansa, we have been created to be in that trend. We have created Mansa Bank to promote the real and true financial inclusion. Why I say true? Because the term financial inclusion is now, everywhere you go, you will hear financial inclusion, you will hear financial inclusion. But we feel that we need to promote the true financial inclusion. Financial inclusion is not only to access payment through payment platform, but it's really for us. The concern of the population is not to see how I will make this kind of payment, what kind of platform I will use to make the payment, but it is where to find the cash to make a payment. And that way we, Mansa Bank, as a bank, we say, okay, there's here a real need to address the basic needs of the population. That's why we did a partnership. We partnered with a telco operators, we partnered with a FinCo company to launch a product that will provide a nano credit to unbanking population. So we think that the financial inclusion will be addressed through the accessibility of loan for the population and also through the platform they will be using to make those payments. But first of all, we need to find a way for them to have cash to face their basic needs. I was saying that between the KYC and how we address the KYC issue with the regulators, so far, let's be very frank, various things have been done to tackle these issues. And I think depending on the KYC level you are, in any way you are capable to do some transaction, that we have been able to achieve this point with the regulators. So I will say today, KYC concern is still there, but we think that with some technology that will allow banks, that will allow financial institutions to identify their customer, let's say, for example, facial recognition, for example. So we have various means now to address the KYC issues. So far, things are going, let's say, smoothly. The key point will be how fast are we going to adapt our regulation to the changing environment. That is the key point for us. I think over years, the answer was to say, yes, financial institutions are facing lack of data or KYC constraint. But let's play the devil advocate to say, are we really sure that financial institutions are promoting financial inclusion? We don't think so. So far, what we are seeing is that the promotion of financial inclusion is mainly driven by telco and fintech, not by financial institutions. And for us, the explanation is quite simple. In our region, I would say 80% of the market is dominated by international banks. And their key focus is not really to the promotion of financial inclusion. This call is for local banks to address it, because I think that as a local banks, my survival will depend on my capability to address the need of the unbanking population. That is the huge part of my, I would say, markets. So I would say today, from what we are seeing, yes, we will still raising the same issues of KYC, of lack of data, but we do think that for the time being, financial institutions are not innovating also to address the financial inclusion. What we have done with the telco operator, with the fintech company, for us is the first step of how we want to promote the true financial inclusion. So I will say yes, but we need to come also with innovative solutions. The lack of data or KYC for us as Mansa Bank is not the key issue. The key issue is the will of the players to find innovative solution, and we think that there's a huge potential there, and that's where we want to go in these coming years, because the battle for the financial institution will not be on the wholesale side, it will be on the retail and mass market side, and we are preparing ourselves for this fight into brackets, I will say. I think the right model is what we Mansa are trying to do. Is not competition, but I would say really cooperation, and a strong cooperation, strong partnership between banks and telco, not only bank and telco, but fintech, microfinance institution, and all the other stakeholders. Because banks will not invest again in CapEx, opening branches across the region. It is expensive. There are so many risks linked to this kind of strategy. But we have fintech that are much flexible. We have microfinance institutions. We have other parastatal entities across the region. So we think that we have the ecosystem now to address the unbanked needs. So the promotion of the financial inclusion will really come from a true partnership, true cooperation between banks, telco, fintech, microfinance, and all the other stakeholders. And we, Mansa Bank, we have been created to go into that. So yes, for sure, it will be a cooperation, not a competition.